Welcome to Impact Makers Radio, featuring industry thought leaders sharing problem-solving insights to help grow your business and live the life you love. And here's your host, Stewart Andrew Alexander.
Hi, and welcome to another Let's Talk Retirement conversation. And on this segment of the show, ladies and gentlemen, I have financial life advisor Bob Stone, founding partner of Telemus Capital from Southfield, Michigan. Now, Bob, who has a wealth of experience in the area of retirement planning, will be talking to you today about not getting too conservative the closer you get to your retirement age. So, if you are one of the many people approaching retirement age in the Southfield, Michigan area, you might just want to take a break, log out of Facebook or Twitter or anything else you happen to be doing which may cause a distraction, and get ready to listen in to what Bob has to share with us today. So, with that said, let's not keep him waiting any longer. Welcome to the show, Bob.
Thanks for having me. It's a pleasure to be here.
You are so welcome. We're glad to have you on as well. We know just how busy you are over there. So let's just jump feet first in. Briefly, in your own words then, Bob, describe the kinds of people who you serve and the various types of situations they find themselves in when they come to you for your help.
So we're a kind of a holistic wealth management firm. So we work with people really not just managing assets, but helping them figure out what their dreams, their goals, their aspirations are, and how do they get to those dreams and goals and aspirations. So we work with individuals, executives, CEOs, entrepreneurs, people who are looking, work very hard for their money and want it to work very hard for them, but they don't have the time to do it themselves. So our job is to really take the reins of their entire financial life and help them figure out how do they get from point A to point B and do it as efficiently as possible. And as we say, we're in the stay rich business, not the get rich business. So it's our job to really not blow up or screw up anything that they've done so far and help them get a good return on their monies. Not particularly great returns because that involves a little bit more risk than we're willing to take, but get good returns on their money and help them do it in a smart fashion.
Okay, then before we continue, Bob, it must be said that anything you share with us from this point on is not legal advice or legal assistance. It's purely for the purpose of disseminating information. Can we both agree on that today, Bob?
Yes, we can.
Okay, so with that said, when you think about those people who you just described, the people who you help, what's the most common misconception you come across while you're out there working with them on a day-to-day basis?
I think there's a couple. One is that they can do it all by themselves. A lot of people think that they can just go to Fidelity or Schwab website and do it themselves. And one of our jobs, and probably one of our biggest jobs, is keeping the emotion out of investing and financial planning. A lot of people see the market pull back. They want to sell their stocks right away. And if my 30 years of experience in this business has taught me anything, is whenever there's a sell-off, that's more of an opportunity than a reason to get out of the stock market. And really, it's creating a less emotional a fix for our clients.
So based on what you just shared with us then, Bob, and obviously keeping your clients' confidentiality in mind, please share an example of how you've helped or even how you would go about helping somebody who came to you with that challenge, that misconception you just described, and what kind of transformational results you were able to or would be, on the whole, be able to gain for them.
A good example would be we have a local doctor who involved in one of the local hospital chains came to us and really had no idea where his money was invested, no concept of what he needed to do to retire, and he was probably 5 or 6 years from retirement, and basically brought a box into the office, dumped it on our table, and said, "Now what do I do?" And we were able to help him work through the process of figuring out, A, what he had, B, figure out what he actually needed to get to retirement. So we went through an entire financial plan with him, looked at not only his investments, but his insurance, his estate plan, and worked out all the necessary things that needed to be done, helped him coordinate with his tax attorney and his CPA to make sure they were all on the same page, so we coordinated the team. And then we laid out for him what he exactly needed to do in terms of his investment returns as well as his savings needs for the next several years to get him to the point where he and his wife felt comfortable enough that he could retire from the hospital chain that he worked at. And as a matter of fact, we got him to that point probably a month or so ago, and he announced that he was going to retire in March or April of next year. So he has successfully made it to retirement. Probably would have never been able to do it had we not been able to help him really kind of put together a game plan and feel comfortable that he had the assets to get to the retirement.
As a reminder, ladies and gentlemen, my guest today is financial life advisor Bob Stone, founding partner of the Telemus Capital in Southfield, Michigan. Now, today's topic is don't get too conservative the closer you get to retirement age. Now, with that in mind then, Bob, and for those people who are approaching retirement age and they are listening in right now, please share one common but unknown pitfall that they need to be aware of, no matter what kind of situation they find themselves in.
We find that a lot of people, as they get closer to retirement, pare back in their risk investments. And risk, I mean equity. And I think people underestimate how much longer they're going to live. When I first started in this business, when we started running financial plans, we assumed people will live to 80. We're now calculating people are going to live to 100. And wow. Maybe we're a little aggressive on that, but at the end of the day, I'd rather be wrong and have them die a little bit younger than 100 than be wrong and have them live longer. So I think the risk that people face these days is that they could potentially outlive their money. And if they're not growing their money, continuing to grow their money for the 20, 30, maybe 35 or 40 years that they're in retirement, their money's not going to last them. So the pitfalls is getting too conservative, going all to fixed income, or going to CDs or just municipal bonds, where they're going to need to grow their money for maybe as long as they worked. They could be in retirement for as long as they potentially worked. And so their money needs to work for them for a very long time. And you're not going to get that in a, what's the 10-year at? The 10-year is at a 2.3, 2.4%. You're not going to be able to afford your retirement with a 2% inflation in 20, 30 years, getting only 2.3% on your money. And that, to me, is a huge pitfall that people underestimate how long they're going to live.
Well, thanks for sharing that, Bob. That's a very useful insight for our listeners out there, so thank you. You kind of got me curious right now, Bob. How many years have you been a practicing financial life advisor?
For 30 years.
So for 30 years, that's quite a long time. So you must have helped hundreds, possibly even thousands of clients in that time. I think I'll just assume that. But when you think back to all of the people who you have helped to create that transformation they were looking for when they first reached out to you for your help, on a deep down personal level, Bob, what does it actually give you and how does it make you feel?
I feel satisfied that I've been able to help people reach their goals, reach their dreams, figure out a complicated situation and make it a little bit simpler and easier for them to digest in the long run.
So let's spend a brief moment talking a little bit about your backstory, especially your formal education and your experience as it relates to the topic of retirement planning.
So I have a degree in economics from the University of Michigan. I also have gone through Wharton University and UC Berkeley's IMCA program for Certified Investment Management Analyst. I started at Merrill Lynch in 1987, worked my way through Merrill Lynch, left for a whole host of reasons, but most of it was I felt that we needed to too many times protect ourselves from what was right and wrong at Merrill Lynch versus what was right for the client. We went to UBS, and after several years at UBS and not really liking the situation there, we decided to start Telemus and be an independent RIA working as a fiduciary and doing what's right for our clients first and foremost, and then helping them kind of reach their goals.
So for those people who are approaching retirement age then, Bob, and they're listening right now, what final thoughts would you like to leave with them before we close out with our last question for today?
I think the most important thing for retirement planning as you're getting closer to retirement is to have a game plan and stick to it. Sometimes people get a little bit too emotional, caught too much up into the situation, and forget that this is a marathon, not a sprint, and that short-term decisions could affect you in the long run. And as long as you have a solid game plan and a solid investment game plan, the long-term tends to work out. So, the old saying that Peter Lynch used to say, I can't tell you where the next 1,000 points of the market's going to be, but I can tell you where the next 20,000 points of the market are going to be. And the market has tended to go up over the years. You just have to have patience and a little bit of intestinal fortitude to handle the rougher periods of the market so that you can succeed in the long run, not the short run.
So if somebody feels they want to know more about what they need to do the closer they get to retirement age then, Bob, what's the easiest way for them to connect with you?
You can go right to our website. It's telemus.com, www.telemus.com. We have a contact page where you can reach out to us. We actually have some tools on there to help you figure out your risk tolerances, but there's also a way to contact us directly, and our email addresses are on there too.
Okay, fantastic. We are unfortunately out of time. So once more, ladies and gentlemen, we have been listening to financial life advisor Bob Stone. Thank you so much for sharing so generously with us today, Bob. You have certainly demonstrated that you are a true educator, advocate, and trustworthy advisor for your client success. So thank you.
Thank you for having me. I appreciate it.
You are so welcome, Bob. And I'd also like to take a quick moment to say a big thank you to you, the listener. Without you, we wouldn't have anybody to speak to. So thank you for joining us on this very insightful and informative conversation with one of the top financial life advisors in the Southfield, Michigan area today. Again, his name is Bob Stone. Make sure you do check him out. There's some great resources on his website. Send him an email, give him a call. Whatever you decide to do after listening to Bob today, I am absolutely sure you're going to be in the right place to get started. So that's it for another show. My name is Stewart Andrew Alexander. I will be back shortly with some more leading retirement professionals in this, our series of Let's Talk Retirement Conversations. So, until then, take care, have a great day, and we'll talk real soon.
Thank you for tuning in to Impact Makers Radio. To listen to all past, present, and future industry thought leaders and trendsetters, visit us at impactmakersradio.com.